Welcome to Spiedel's Federal Tax Minute. I'm your host, Catherine Zidane. This week we're covering durable powers of attorney and when they may apply to represent a taxpayer in federal tax matters. Attend Spiedel's Federal Tax Update webinar and be prepared for the 2024 filing season. This 8-hour course will cover everything that happened during the year, and you can see a list of topics covered and get registered at spiedel.com under webinars. Generally, a taxpayer is required to sign Form 2848, Power of Attorney and Declaration of Representative, to allow someone to represent them in a tax matter with the IRS. The IRS Office of Professional Responsibility has informed taxpayers that they can use a durable power of attorney to overcome a legally incompetent taxpayer's inability to complete a Form 2848 in tax matters. Durable powers of attorney created for estate planning or other purposes give a designated agent or attorney-in-fact authority to make healthcare and financial decisions when an incompetent or incapacitated taxpayer is not in a position to execute a Form 2848. Durable powers of attorney usually don't authorize representation before the IRS because this is not their primary purpose. But if the information presented on Form 2848 is included in a durable power of attorney, then it may authorize the attorney-in-fact to represent the taxpayer before the IRS. Specifically, the information required includes the taxpayer's name, mailing address, and social security number, name and mailing address of the appointed representative, a clear expression of the taxpayer's intent concerning the scope of authority granted to the representative, and a description of the matter or matters for which the representation is authorized that needs to include the type of tax involved, the federal tax form number involved, and the specific year or years involved. The appointed representative is also required to meet the practice requirements specified by Circular 230, Sections 10.2 and 10.7. A valid durable power of attorney that includes this information will only be accepted by the IRS if a completed Form 2848 is also submitted with Part 2 of the form, Declaration of Representative, completed and signed by the appointed representative. The IRS recognizes that taxpayers cannot predict when future audits may occur. So a broad, durable power of attorney simply states that the attorney-in-fact is authorized to represent the taxpayer in federal tax matters, which the IRS will accept as giving the attorney-in-fact the authority to execute a Form 2848 on behalf of the taxpayer. Whereas an existing Form 2848 is typically voided when the individual who granted the authority becomes incompetent or incapacitated, a durable power of attorney remains operative or becomes effective when the taxpayer becomes incompetent or unable to act on their own behalf. According to the IRS, the durable power of attorney has to be created before the physical or mental incompetency. Tax professionals should discuss this matter with their estate planning colleagues so that they can work the required language into any durable powers of attorney they write. We covered this topic in a recent issue of Spiedel's Federal Tax Letter, a monthly newsletter plus a searchable online archive of back issues that keeps you at the leading edge of the federal tax issues that impact your clients. You can get more details and subscribe at spiedel.com under Publications. That's all for this week. Join us next time for another episode of Spiedel's Federal Tax Minute.